Hello everyone, welcome to the Ichimoku.co daily stock market review for the trading day ending Wednesday, June 15th. Firstly to the S&P 500, and here we've seen a confirmed change of trend today. This current candle forming a higher high and higher low. If you recall the previous day's trading, we were looking at support coming in below the Kijun-sen indicator and within the top of the Ichimoku cloud, with the very strong price rejection as evidenced by the large shadow. And we're looking for a change of trend, and we actually have seen that today. Unfortunately, the buyers have lost any control that they had throughout the trading day. The buyers were strong enough to establish that trend, but the formation of a black body candle and the market closing down at the low suggests that the sellers have taken control again, even though the trend has changed to the upside. So we have something of a resumption of this type of trading activity, although the size of the black bodies are not as large, but closing down at the low does suggest that there is potential for further downside. Now, having said that, however, we do have the market trading around the top of the Ichimoku cloud, and we know that the edges of the cloud are very important areas of support and resistance, and in this case support as we're approaching this from outside of the cloud. Previously here, that previous day, we saw price rejection from there. The last time we were testing around the cloud, we saw strong price rejection. But just with this candle, we have seen some negative momentum form, sellers in control. There is just a suggestion here we could see a change of trend in the market trade back within the cloud. Now, whether we close within the cloud is debatable, but the approach here to the cloud is quite significant, and the sellers are fairly strong on this approach. Now, if we do close within the cloud, that would give us a neutral market in big picture terms, whereas we're just slightly bullish by closing just above the top of the cloud, but certainly we're that close to the cloud that it doesn't really matter. We're really truly neutral in that longer term time frame by being so close to the cloud anyway. So a lack of any clear direction now once again in the longer term time frame. Now, if we do see the buyers come into the market, and there is a possibility of that off this strong support that we're seeing here at the top of the cloud, and if we can breach up through the top of this highlighted zone of previous support and resistance, and we can see here for the last 2 days, the top of this zone is held as resistance. If we can close in a bullish manner up there, we could easily end up trading back up to around this 2093 level, even possibly up to the 2100, where we may find some very, very strong resistance coming in line with the Tenkan-sen trading around that area. Now, just looking at our bands here, and we are now trading within the band, suggesting that we have a fairly neutral market in that medium-term time frame, just below the lower band, so slightly negative, but certainly not trading outside of the bands. The bands had been moderately wide. They are just starting to squeeze up lightly, suggesting that we're not likely to get any strong trending activity at the moment. Importantly, we saw the market previously outside of the band with a strong bullish tone, now trading within the bands and trading down towards that lower band, finding support very close to there, rallying and finding resistance at the middle of the bands. There is potential for this to eventually this market to transition into a new downtrending phase, and we are perhaps seeing the building of it here. It really does depend on how the market reacts in the next few candles. If we do break out through the top, through the middle of the bands and trade through to the top here, then we could end up trading back out through the upper band and continue trending higher. But if we do trade to the downside, and if the bottom band fails to hold a support and it trades at 2062, and if we close in a bearish manner with strong follow through and take out one of these swing lows, we could see development of a significant downtrend. At the moment though, the market is potentially setting up for that downtrend scenario, but we never preempt the market. We watch how the market reacts to these areas. Next to the Nasdaq 100, and here we see a candle that hasn't taken out the previous high. Previous high was at 4439.73. Today is 4439.61, so only just failing to take out that previous high. So no change of trend here with this candle. Technically still a downtrend in place. There was an opportunity here for a change of trend with the introduction of indecision, but importantly the top of this highlighted zone has held as resistance, and the area above the 4421 level has held as resistance, and the market has been rejected quite strongly from above that area with the sellers taking control, and one of the largest black body candles that we've seen for some time. So sellers finding some strong negative momentum. Now we have seen, however, some support coming in just around and slightly below the Kijun-sen indicator, as we saw for the previous day's trading, and also very close to the top of the cloud, but also importantly around this highlighted zone. The top of this highlighted zone has held as support, whereas it's previously been resistance. So very solid support below, but interestingly, over the next probably about a week or so, and importantly in a couple of days' time, the cloud becomes very, very thin. And it suggests that if we do maintain this strong negative momentum that has been built today, there is a suggestion here that we could see the market break out to the downside down below this thin cloud and give us a bearish market in the longer term time frame. Now obviously if we do see the breakout, to confirm, we like to see strong bearish activity on the breakout and then strong follow through. Also, we'd probably want to see the market break down through this 43.47 level, which is at the bottom of this highlighted zone. But certainly the opportunity is there, and with the approach here being quite negative for today's trading, it does suggest that the sellers are perhaps returning back into this market. Now to the bands, and still trading within the bands, just slightly below the middle of the bands. The bands are quite wide, they're starting to squeeze. So this is one factor against any strong downtrending activity at the moment. What we do need to do is watch the bottom of the bands around this 4389 level very closely for it to act as support or for a potential breakout to the downside. If we do rally, watching the middle of the bands, 4458 as resistance. Next to the Russell 2000, and confirmed change of trend here for today's trading. If you recall, previously we were looking at the strong downtrend, the market finding support at 1147. The introduction of indecision suggested very strong likelihood of a change of trend. We have seen that occur, but on a very small bodied candle where the sellers have taken control, the buyers have failed to take control of the market. It does raise doubt about the potential for the market to continue higher, and this large shadow on the top highlights the buyers losing commitment in a major way, and that coincides with the market trading up just through this previous swing high, an area where we have seen previous strong price rejection from. So with the sellers taking control, it does suggest good potential for a change of trend back to the downside, but still, once again, watching this 1147 level, previous support level, it may continue to hold a support. If we do break out down through there, we could end up trading back down to the Kijun-sen around 1138, where we could find strong support coming in. In terms of Ichimoku, a bullish market in both the longer term and medium term timeframes, supported by the Chica span, and maintaining a bearish tone in the short term timeframe by trading down below the Tenkan-sen. And looking at the Russell 2000 with the bands, and here for the second consecutive day, the middle of the bands has held as support. Just down through there, held as support for the previous day's trading. So that's going to be our benchmark moving forward. 11 roughly about 1149 is where it trades, and if we do close in a bearish manner down through there, we could eventually end up trading down to the bottom band, 1122, where we should find some support. But if we do bounce off this middle of the band support, we could end up trading up through to the top of the bands around 1175.